Hey everyone, in this video I'm going to bring you 4 undervalued growth stocks you can buy for less than $25 each. That's right, for less than $100 in total, you can own one of each of these 4 growth stocks. And I also think that they're undervalued in terms of their valuation as well. So I'll highlight each of these growth stocks. I'll show you how undervalued they are and talk a little bit about why I'm recommending these stocks in specific to buy right now.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, the 4 growth stocks that are undervalued that I'm recommending right now for less than $25 each are Chewy, which is trading at $17 per share. Sofi Technologies trading at $7.39 per share. UiPath trading at $21 per share, and StoneCo trading at $16.84 per share. So these are all stocks that are trading at less than $25 per share that you can buy today that I think are undervalued. Now, most brokerages will let you buy fractional shares. Well, I shouldn't say most, but I should say many brokerages allow you to buy fractional shares. So those of you with not too much money to invest can buy fractional shares of the more expensive stocks like Nvidia if your brokerage allows for that. So you can look for those brokerages that sell fractional shares if you're interested in buying some of those more expensive stocks trading at close to $1,000 per share. But if not, if you want to focus on those less than $25 each, I think these are 4 excellent stocks here at current prices that I think make good choices for investors starting out with not too much money to invest. Now, in addition to just the market price of these stocks, the valuation is also cheap. So one of the metrics that you can use to determine valuation is the price to earnings forward ratio. This measures how expensive a stock is in relation to the profit it's generating. It's not unlike when you go to a store, you look at what you're buying and you're comparing the price per something, right? If you're buying soda, you're looking at the price per can maybe, or the price per bottle, or the price per ounce. And those numbers will tell you if you're getting a good value, right? You might want to pay a price per can of less than $1 each, and anything above $1 might be expensive. Or you might be looking at a price per ounce of a certain number. So determining what's a better value, you got to look at what you're getting in return, not just at the price you're paying. Because I could tell you, hey, I'll give you some soda for 1 penny, and you might think it's a great deal, but all you're getting is a tiny droplet of soda. Is that a great deal for a penny? I don't know, maybe. But if I tell you I'm giving you a whole 2-liter bottle of soda for 15 cents, now you're thinking, oh, that's a good deal because I'm getting a 2-liter bottle of soda. Even though you're paying 15 cents, which is 15 times more than a penny, you're getting a hell of a lot more. You're getting a whole lot more than just a tiny droplet. In similar fashion, when you're looking at investments, when you're looking at businesses, you want to look at what you're getting in return. And so just because the market price is low doesn't make it a good value. So in these 4 stocks I've highlighted for you today, they are giving you good value. They do have good return for what you're paying. They do have strong earnings. And you can see that here. Chewy is trading at a forward price to earnings of 17.99. Sofi trading at a forward price to earnings of 46. Sofi stock is more expensive, yes, but you're getting a lot of earnings per share growth for Sofi stock. Management said they expect their earnings per share to go as high as 80 cents over the next couple of years, and then to grow at 25% per year for several years beyond that. So you're getting excellent growth in profitability from Sofi Technology stock, and therefore paying a higher price is okay because you're getting a lot in return. Similarly with UiPath, you're paying a forward price to earnings of 31. UiPath has made excellent strides in boosting profitability. They turned positive in operating income in their latest quarter. They're on the forefront of AI technology, partnering AI with automation, and that's proving to be a powerful combination in the business world. Finally, StoneCo, trading at a forward price to earnings of 10.72. StoneCo is also a very profitable financial company. Management team there saying that they're focused on profitable growth and not just expanding customers. I like that strategy overall. I think that boosts its long-term value because they're not going after customers that are not going to be profitable for the company longer term. Now, if you look at these companies, they're all profitable. Net income in the latest quarter, starting with Chewy at 34.26 million, followed by Sofi at 47.91 million, UiPath with 33 million in profits, and StoneCo with 83.67 million in profit. You can see some of these companies were struggling with profitability in 2022. But they've turned things around. They've moved in the right direction and achieved profitability on the bottom line, which has been even more important because interest rates have moved significantly higher. More than 500 basis point increases in interest rates in the last 2 to 3 years. When interest rates are increasing, it's even more imperative to generate profits on the bottom line because the opportunity cost of capital is much higher. The cost of capital for businesses is much higher. So if you're losing money, you got to pay more to get that money from investors. You got to pay more to lenders to get that money because the cost of capital has increased. Lenders are not going to let you borrow money at 4% and 5% anymore because they can place that money with the bank and earn over 5% on a super safe government bond. So why would they lend you money at 5% when they can buy a government bond that's much safer than lending money into a business? And so as the government bond yield increases, the cost of capital increases for all businesses because investors have a choice. They can go with the government bond that's essentially zero risk, or they could lend to your business. And so your business has to offer a greater yield in order to convince investors to take money out of government bonds and give it to you as a business. So you've got to pay more when the government bond yields increase, and government bond yields, like I mentioned, increased by over 500 basis points in the last few years. And so many businesses scrambled to try and achieve profitability. Not all businesses were able to. Some of those, like the 4 I mentioned here, were able to do that. And that's impressive. And that's partly one reason why I'm recommending these stocks as buy, not only just because they're selling at a price per share of less than $25. That's one criteria I used. But another criteria is that they're making progress, improving profitability, and then the valuation being where it is, not being too expensive just because the market price is low and the valuation is too high, right? So remember, you always want to look at what you're getting in return, not just for what you're paying. You could be paying a very low price and still be getting even less in return, and that's not a good investment, right? You'd rather pay more and get even more in return rather than pay less and get even less in return. So that's why when you're looking at these kinds of undervalued stocks or stocks that are less than $25, you also want to look at what you're getting, and I talked about that in this video. And that's why I think these 4 stocks are undervalued. Not just because they're trading at less than $25 per share, but because the valuation, when I'm using the forward price to earnings ratio, also signals that these stocks are undervalued. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.